Hi, everyone. Alex Kaminer here from Twin Shores Financial YouTube channel. We help translate what's happening in the financial markets so people can use it in their day-to-day lives and make sharper financial decisions. I'm here with Tim Nihil, our CEO and Chief Financial Planner, and Alex Krieger, our phenomenal analyst and resident crypto expert. We are here to talk about what is happening in the traditional and digital marketplace and share the news that we hear on the street. As a reminder, everything you hear today is not financial advice, but is meant for informative and educational purposes. For today's big topics, Tim and Alex will be talking about the oncoming increase in gas prices, how the Fed is still watching the UK and Europe collapse in the sovereign debt crisis. We're going to talk about the OPEC meeting and the Bitcoin correlation to gold and silver. We hope you enjoy the content, and if you do, please like, subscribe, and share. Tim, off to you.
Awesome, thank you. Well, good afternoon or good morning, good evening, depending on the time of day that someone's listening to this. Why don't we kind of kick it off with the traditional markets. So past 2 weeks, it's kind of been the same old. We saw a run up, or what we would call probably a melt up, where we saw a bounce back in gains last week in the beginning of October in your equity markets. And obviously those gains have all been given back in the past couple of days. So I would say much to do about nothing there. I would say from a market perspective, it's still all eyes on the Fed. Like, if I have to talk about the Fed anymore, I think I'm gonna hit myself on the head with a mallet. Fed this, Fed that. So their next meeting is November 2nd. They are probably going to raise rates by another 75 basis points. And we're getting to the point where I would say you're either going to get the Fed pivot coming within the next 90 to 120 days. Otherwise, you can kiss your markets goodbye. And that includes all of them. It's not just equities. It's not just risk assets. It's bonds, and it's also cash. Right. So
same with real estate.
No, real estate's going to get hurt too. Okay. I think this time around. So if you look at the difference between the tech crash in 2000, the tech bubble, you look at 2007, 2008, and look at today, I think the biggest risk is commercial real estate. We've been seeing a lot of reports come in where, especially in places like New York City, these buildings are just done. And they're massive losses. We're talking hundreds and hundreds of billions of dollars. We're still expecting, and our folks inside in the real estate market are still saying at least another 20 to 30% drop. In our equity markets, we can expect probably at least another 20% clip off and runoff. And the case for commodities and gold and silver and Bitcoin are becoming stronger and stronger than ever. And it doesn't matter if it goes either way, right? So if they continue to unwind the balance sheet and do quantitative tightening, you're going to see a massive market runoff. We'll go into, this is more Great Depression territory, I think. And you're still going to see commodities and energy and crypto run. That's if they let everything tank, right? If they don't let everything tank and they print money, well, you save the equity markets, but then you're also creating a huge run on commodities, energy, and crypto and Bitcoin. Yeah. So there it is, folks. If you're wondering what the hell to do right now, and there's no in between. The bond markets, we've had a 40 plus year bond bull market where bonds pretty much never lost. Those days are over, and that's really, really bad with the retirees. And in financial planning, when people are retiring, you always say the worst time you can retire is when your market crashes or there's a down market, right? So anybody that's retired over the past year and a half, 2 years, there's a significant chance they're going to be going back to work very, very soon. So there are, I would say, in the next 3 to 6 months, and this is no doubt, I mean, Europe's broke. United Kingdom's already reversing policy. They're going back to money printing because it's so bad. JP Morgan even said in the United States, this is so bad. Like, I've never seen people on the inside talking about things so catastrophically, not even 2008. So, but that's the position. And now we're getting to the point in time where all this stuff's really going to start hitting home.
Yeah, that sounds catastrophic. That's the best way to put it.
Well, there is massive opportunity in it. Remember that.
Right, of course. And that's if people are like listening and knowing what to do, like you being smart about it.
I'm usually pretty big optimist.
So something else that happened in the past week that I'd love to address is this OPEC meeting that people have been talking about, and how these 20 plus world leaders who control the majority of the oil reserves in the world decided to cut back the amount that they released to 2 million barrels a day. And that ultimately, while it won't be the only thing that raises gas prices, looks like that's going to be a big factor in that. Do we have anything that we want to talk about in regards to that? What do we think is going to happen?
I would just say this is just more fuel for the fire. So when we were talking about gas prices after these November midterms, it doesn't matter. Like, gas is going to be $5 to $6 a gallon come mid to end November. I mean, it's just going to happen. Like, people don't understand energy, okay? And so like Krieger and I grew up in energy families, natural gas, oil, electric, all this stuff. What people don't understand is the type of oil that you pull out of the ground in Texas is different than the type of oil you pull out of the Middle East, which is different than the type of oil you pull out of Russia, right? And we all have our different requirements for octanes and stuff that we need to meet energy needs, and it's different across the world, right? So, you know, the Middle East oil, a lot of it comes back here because that's the oil we use. We ship a lot of our oil from the United States out to other countries because that's just, you know, kind of the way the energy in the oil system works, and natural gas. There are all sorts of different types of oils, all sorts of different measurements for that, natural gas, etc. Right? So long story short is oil is going up and the price of gas is going to go up because the United States sold off most, if not all, of our strategic oil reserves to the Chinese. And that's what's kept the price of oil and the price of gas down. We're coming to the end of our reserves. We're talking in the next 2 to 3 weeks, maybe 4 at the most. So the gig is up there. And so, you know, it's the OPEC thing just adds on to what was already there, and it's just going to increase. I think the only thing for everyone listening is you better get used to inflation because it's not going anywhere anytime soon. And that's the moral of the story.
Just going to continue to get worse for a while.
Yeah.
Yeah. So to hopefully move to maybe a more positive note, how are Alex, how are the crypto markets doing?
Stagnant. We are just sitting in this range that we've been in for probably a month now. I will say the difficulty for BTC, the hash rate has been the hardest it's ever been, 35.6 trillion hashes per minute or something like that. So it's the highest difficulty it's been. There's also, since 2018, there's been go ahead.
Explain for everyone, what is hash rate?
It's the difficulty that it takes for Bitcoin, for the miners to mine the actual Bitcoin, to figure out the code.
Right. So the more difficult the hash rate becomes, the more difficult it is to mine, which
Correct.
becomes a little bit more restrictive for Bitcoin.
Yep. makes
Yeah.
it harder to mine, meaning you'll need more machines or more power in order to mine it and so forth. There's also, since 2018 on exchanges, the Bitcoin is at an all-time low, meaning the amount of Bitcoin on exchanges is at an all-time low. So either a bunch of Bitcoin are being bought up, or a bunch of people are moving their Bitcoin off of exchanges, which is very interesting to see.
Interesting.
Well, that just indicates that a lot more people are holding.
Yes and no. It could be big institutions coming in and buying, you know what I mean, buying it for their clients and moving, you know what I mean, moving the needle. So there, I would say in the next run up, that means on exchanges will have less liquidity, meaning the prices will go up faster in a sense. They're buying from a smaller pool.
A question that creates in my mind is this ultimate, like, are we going to see another dip in the crypto markets? Or do people really think that this is as low as it's going to get?
To be honest, I bet you we hit a double bottom. I bet you we do exactly what we did in June, I think it was. We hit a low of 8 something for Ether and practically, I think it was 17 for BTC, which we're in that 3,000. We're right there practically. So this could be the bottom. We could sit here for another 2-3 months, and it really depends on the macro of everything that's going on in the world right now with OPEC, all these other world currencies falling and failing and falling apart. Bonds are failing. I don't know.
Right. It's, yeah, we're at the point now where, you know, people like Peter Schiff and Robert Kiyosaki are going to get their day, because they've been screaming, it's coming. And if you look on the run in the European Union, they're done. UK, they're done. I mean, and then with what you're seeing in commodities, I mean, they're talking about there's going to be a massive run on gold and silver. Like, you're not going to be able to get it.
Interesting.
And then speaking on the gold and silver, you mentioned a little earlier off the recording that you think that Bitcoin is really coupling with gold and silver, and that it's going to not stay like on price, of course, but like continue to follow those trends.
Correct. You can look at the charts and they look pretty similar on the way they're following and moving together in correlation.
Yeah. Which is
It's really interesting.
Has been talked about, which is interesting, right? It always needed to, like, BTC needed to decorrelate from risk assets and technology, and all of a sudden it's starting to behave like gold.
Right.
Yeah, that's been the whole story behind Bitcoin. It's digital gold.
Right.
You know, I got something this morning, and Krieger, I'd be curious if you have any comments on it. So I got a list of the top 9 banks in the world by total assets.
Mm-hmm.
And as of the end of September, 7 out of 9 of them are now in the custodying crypto assets business.
Shocking. 2 years ago, we couldn't find one.
No. The latest was Societe Generale, excuse my pronunciation, but they were the latest to get in. And Bank of New York Mellon officially announced this past week that they're officially in the crypto custody business.
Yeah, they're BNY, right? BNY Mellon.
Yeah, my wife's company, InvestNet. So they are a large custodial platform. They do a lot of technology for financial advisors and managed account platforms, things like that. They announced that they are bringing crypto custody abilities to their 3,000 RIAs that they work with. So, you know, this big wave and tsunami for crypto, I think is starting to build.
I wouldn't be surprised if by the end of 2023, all of the top 9 would be in crypto and in some way or in the other.
Right. So it's like and maybe this is the interesting thing for me is you watch what the general market sentiment is toward it, and then you just look behind the scenes at what's really going on. And now you're looking I'm looking at it like, well, this thing's playing out how these people have been talking about how this is going to play out.
Right.
Yep. Exactly.
A lot of interesting things that happened in the last couple of weeks and that are like in the process of being built up.
So I guess it wasn't so boring.
Well, we're in the best time. It's what is it? Red October,
Red October.
which fits perfectly right now.
Right, right.
All right. Well, I think that's everything we have for today. Is there anything else either of you would like to add?
I don't think so. Just keep checking out our videos and our content and our
Yeah,
website, because we have a lot of stuff that is going to be out there for people to start taking a look at.
Yeah. Well, on behalf of Twin Shores Financial, thank you all for tuning in. If you enjoyed it and want to keep up to date on the markets, please tune in every other Thursday for all your financial information. And please don't forget to like, share, and subscribe. And if you have any questions or comments, please don't hesitate to put it down below. Anything else?
I got nothing. Thanks, everyone. Have a great day.
Awesome. Thank you, guys.